Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Wednesday, the 31st of July, Fed Day. Not a happy response as the Fed cuts rates by a quarter point, as most rational people, at least it seems to me, thought that they were going to do, kind of leading in that maybe this isn't the start of something bigger. This is just a, I believe the term was mid-cycle adjustment. Initial response, definitely on the grumpy side, immediately selling off, did come off of the lows, but closing pretty good in the red, pretty much across the board in the market. And good afternoon, Robert. And hey there, Scott, Lauren, Steve. Always good to see you there, Cyberson, and Fortino. As always, a pleasure to see you, my friend. It was pretty steep, Let's start there. Actually, we'll come back to kind of look at the interesting things that happened after that. Hey, Adib, good to see you, buddy. You probably don't need me to tell you where the announcement came in. The initial response, very heavy selling, ton of selling, very, very quick. And of course, as oftentimes, maybe that was a bit of an overreaction in the short term, rallied up, did see some profit taking, weren't able to close with any bullish momentum. So as we're going into tomorrow, broadly speaking, we're still holding our support levels across the board in the market, but we tested them, and we did actually breach them on the intraday, at least our swing support on the S&P here. Going into tomorrow, probably have to be a little bit on the cautious side. Don't think we have enough real information to know anything. My best guess is this is, as usual, the most likely thing is it's an overreaction, because that's what tends to be the most likely thing. But that doesn't mean that is what this one's going to be, right? We do have a pretty decent idea of where support is. We breached it on the intraday. We rallied, closing above that support zone. Certainly something worth keeping an eye on. Going into tomorrow's open, I personally believe that we're realistically, before any real bearish conversations can happen, you got to give out that breakout point. And so while maybe a little bit of caution here going into the rest of the week is in order, and I think that's a fair way to look at it. I think for me, at least, as long as we're holding that breakout point, which the 50-day moving average is sitting just a hair below that, so I'm going to lump that in there too. I'm not really looking at this other than an initial response. Yeah, I'm going to get a little more cautious. It's been a while since we've seen a day like this. This is what days, Fed days used to look like 10 years ago. They used to be pretty darn crazy. Lately, they've been a little bit more on the mellow side. This kind of brought back some old feelings from a decade ago, because all the Fed announcements used to, at least it feels like, they were always get your popcorn ready. It was going crazy, a ton of movement, and it's not really what we've seen as of late, but certainly is what we saw here today. From a buying perspective, and I am looking at this overall from a buying opportunity developing going forward, need to see some slowing momentum. Right now, we're bearish on the charts, on the shorter term charts, and we're going to need to see a little bit of catching up there. If we can start to see a little upward movement, I'm going to be comfortable looking at things. Now, I think the way to trade in, if this is a support bounce, I'm going to not be looking for pullbacks. I'm going to be looking for breaks on things like Jeff from the stock report, holding up right at resistance. CTAS, another one I ran into earlier today, consolidating high base after an earnings. I'm going to be looking to my old trusted and friendly breakout type of patterns if this is a support zone. Personally, that's kind of how I'm going to approach it, I believe, at least if it's tomorrow. If we simmer down and see some, a doji tomorrow, get some signals on the shorter term charts to the bullish side, I'm all right with that. But one thing I am not a huge fan of, as most of you know, and welcome out, Larry, and hi there, Patricia, great to see you. I don't love when we're below these short-term moving averages. It's never as easy, I guess. I don't know. It's more difficult, probably a better way to put it, in my opinion, when we're fighting those shorter term averages. You guys know that I complain about deeper pullbacks. I'm not a huge fan of them because they have to contend with those shorter term averages so often. I'm going to be a little bit cautious as long as we do have to deal with that. I don't love it. Right now, it was very fast movement, so our 9 still is above the 20. But if that thing crosses below, I think we're going to have to, get a little more defensive here at this point in time. But for today, at least, support did hold. Initial reaction, I'm not going to get too carried away. If we fail at this breakdown point, well, or breakout point, I think that is a much more reasonable conversation to have, not too terribly far away, down in that 2950 ballpark. Looking ahead into tomorrow, another huge slate of earnings. Of course, we had Apple, the big name here today, gapping up and held up okay. Did come off of their highs, much like most things in the market. But another big round of earnings tomorrow, around 50 S&P companies, either tonight or tomorrow. Qualcomm is the big one here tonight, but you've got MetLife, you got VRTX, you've got a lot of everything coming out today after the market closes. And then tomorrow before the opening bell, Verizon, GM, ICE. We've got some interesting names. Nothing as big as Apple, although we do have Shop coming out, not an S&P company, but I know a lot of us follow Shop, or a lot of you guys follow Shop, and some of you, Lauren and Emily kind of got me following it too. So they've got some earnings coming up. I believe they're before the bell tomorrow, but they are before the open, one way or the other. So another huge round on the earnings side of things. It was mostly red today, but it wasn't all red in the S&P. We did see some interesting charts, some interesting moves on earnings. You saw some big, strong moves in some of the retails today. Nordstrom's, certainly a nice solid move. Had a nice breakout on Edison, one of our utility companies, MCO breaking out on earnings, Allstate breaking out on earnings. So some very interesting movers on the bullish side of things, including, and I want to take a peek at these guys so I don't forget, our old friends Harris and Level 3, who we used to talk about a lot, right? Of course, they merged together into this monstrosity known as L3 Harris Technologies, just a combination of Harris and 3L that we used to follow a lot. Big breakout on a decent little earnings report. Going to need something to develop, but has both of those companies, as you guys know, were showing great strength. They were really friendly companies to trade from a bullish perspective for most of this year. Definitely want to get this one onto my watch list. So certainly some interesting bulls out there. On the other side of it, as you guys know, when it comes to earnings season, well, you can definitely see some things move even without the market throwing a little bit of a fit. Our biggest loser today, our old friends at AMD, not a great response to their earnings. You also saw MXIM, a smaller, relatively speaking, semiconductor with a little bit of downward movement off of a miss on earnings as well, throwing a little bit of cold water on some of the semiconductor stocks. AMD probably not the one to be looking for, at least in the short term, although maybe a pullback from a little bit of a longer term perspective could be in order if we like what we saw on the earnings side of things. We're moving and shaking. It's Fed day. It's earnings season. It kept us, it was eventful. So, as we're going forward, do you think we probably want to let this kind of simmer down a little bit throughout the rest of this week, kind of see where we are towards the end of the week for a good signal going forward for the bulls? I think it's an easy call to say the break of resistance is the momentum signal. So if I want to be cautious, I'm going to let this hang out at support. Maybe if we pull back to the breakdown point, we'll have a little different conversation. But as long as our trends are intact, I think we're okay. The one thing, though, is for the first time in a while, we are below those short-term moving averages. Will we stay? I don't know. But right now, with the price action today, we are below those averages on our major indexes for the first time in a little bit. And so certainly always throws a little bit of caution into my mind when I see that. Very similar over on the Dow. You guys know the drill. On a day like this, most things are going to look very, very similar from a broad perspective. So a lot of movement to the downside, closing below the 20, below the 9 here today. Again, we have our breakout point. Let's go ahead and get that added on here. We came off of it, or pretty darn close to it, as our support zone here today. I think that for me is kind of that major level of support that I need to see hold when you kind of put that in with the S&P. Those are pretty big breakouts, huge cup and handle type of patterns on daily or weekly time frames. Should be an interesting price from a bullish point of view. Again, with the rising 50 right below us, I'm hesitant to say that we're too bearish. If we break that, there are still support catalysts, but I will definitely be getting less and less bullish. If we give out these support zones, I think the wise thing to do, in my mind at least, is to kind of come off of any bullishness, start thinking a little bit more about balancing the portfolio a little bit. And I honestly wouldn't fault anybody for thinking about protection on the portfolio right now with where things are at. Over on the NASDAQ, very similar, not quite the same big, huge cup and handle that we've seen, that we had on the S&P and the Dow. We are kind of testing this old resistance zone. Certainly, at least in my mind, not the same level of support, or at least potential support as we're seeing on the other indexes. Would like to see that hold again. We're below things. I think you have to be looking at this as got to be careful going into tomorrow. I'm not going to be tempted by the sweet deals that today presented. Depending on what you were doing on the rut today, you either loved the response to the Fed announcement or you hated the response to the Fed announcement. We closed above that resistance yesterday, had some follow through early in the day. We were really cooking, knocking on the door of 1600 just like that over on the Russell. Good clean break, filling up all of that space in one day, and then the Fed announcement comes around and we give it all back. Now, most of us at tackle trading are probably more likely to be condoring the rut than directionally trading it. So I would imagine the majority of us were perfectly happy with that turn of events. But from a swing, and I could understand the bullish argument for a short-term swing trade on that break with that follow through here today, they probably, unless they took their profits up at the top, they probably don't like it quite as much. Not a whole lot here to say. Ironically, we're actually holding up better on the rut right now than our other indexes. Small caps showing a little bit of strength relative, still above our moving averages. Of course, we've got that major resistance zone just not, right above us. So even if we follow through on this, fake out at this point in time, there's a lot of overhead that we have to keep an eye on going forward. As we move into the sectors, it's going to be a lot more of the same, but it was kind of an interesting day. We were seeing some selling in materials even before the market really started to sell off here today. You were seeing that in the material sector and in the staples sector. Both in particular were kind of selling off fairly reasonably going into the Fed announcement. Much like the rest of the market, we did come well off of those intraday lows here. And so that is a positive, but we, kind of breaking into that 58 zone that we've seen just be something time and time again. Closing above it, I believe 58 is kind of that support zone. If we do give out in there, I like the material sector, but there isn't a lot of support until we get back into what I consider our major support zone at $57 or approximately $57 along with that 50-day moving average. So if we do break through this little 58 range, I don't think we should be terribly surprised if we see a little bit more selling, at least in the short term on materials. Not a lot of technicals to prop us up, taking out a little bit of a trend that might take more, pressure in the market as a whole, but I think it is worth noting as we're moving into the rest of the week. So 58, kind of that first level. As long as we're above this, it's all good. Today was just whatever it was. If we break 58, I will personally expect at least very good chance that we're going to work closer to the 57, test that zone. And I think that is a pretty darn important test. If that gives out, that would be certainly a bearish signal in my mind. Another crazy day over in energy, it has been the last little bit. It's been interesting over there within it, as far as interesting as you can get when you're sideways, right? Big price appreciation yesterday, a lot of money coming back into it. Started out okay here today, as you can kind of see, big old huge doji in those moving averages. I still say this is neutral. I still say the signal is below our support zone down here at that 61.75 range, or up here above resistance, above the 200-day moving average around 64.60. Plenty of earnings yet to come, although I do think it's worth noting our friends in Cabot here, after just a terrible response to their earnings report here last week. Ton of selling top to bottom. We've really started to develop a little bit of a floor over the last few trading days, while energy has kind of been, holding and moving off of that support level. I believe these were stock report. I want to say stock report. Either way, they were on one of the reports. Certainly very much in play for a breakdown. I like, as you guys know, when we build these little floors or ceilings and then give them out. And so certainly there are some candidates out there post earnings, but as you guys know, there still are some big names yet to report earnings over in energy. I still think whether we're looking at bulls or bears as a whole, although I like the way that COG chart looks for a potential breakdown candidate. Overall, whether it's bullish or bearish, I think there's better places to go. I still believe we're sideways with just a hint of bearishness. We've created lower highs here as of right now, but we've not created lower lows. And so a little bit of a skew to the downside. I think the signal would be the break of support, though, and I'm willing to wait for it before I make really a stand, if you will, on the energy sector. Over in financials, much like the market, just one of those days, right? We've sold off quite a bit. There are interesting characters out there. And hey, Thiago, good to see you, buddy. Always great to have you live with us. I hope you are doing well. There's some interesting candidates on the breakout side of things. I guess it helps if I type the right ticker symbol. We looked at Jeff, went out on the scouting report. You've got Cincinnati Financial, another one, came out with an earnings beat here today, ran into the resistance level, their all-time high here, pushed back off of it, certainly in a little bit of a high base anyway, a little bit of a consolidation period. So there's interesting candidates out there still in the financial sector, especially breakouts right now. On the other side of things, CME, not a positive response to the earnings, kind of a mixed report, but more importantly than what the report was what the response was, working into a support level. We have ICE coming out here either tonight or tomorrow morning. So another one of the big exchanges coming out. You had Allstate come out with a really solid response to their earnings, breaking through resistance, hitting some new highs. Definitely a strong look, and certainly helpful for some of the insurance companies over in the financial sector. It was really nice last quarter how consistent we were seeing the movement on those insurance companies. I'm really looking forward to about a week and a half, 2 weeks from now, when we kind of settled through all of this earnings stuff, all of this Fed stuff, and we're just going pure price trend again. We have to give it a little bit of time. We've got gaps. We're going to have new price action develop, but we'll find new things that are either showing great strength or weakness, like we did last quarter. I'm looking forward to it. I've had about enough of earnings season. But we are overall seeing some pretty nice things still, in my opinion, in financials. Certainly one of the areas that I feel the most comfortable with going into tomorrow. If I'm buying anything on upward movement, of course, if we're just tanking in the futures market, that's not a great look for any bullish play. But this is probably the area that I feel most comfortable tomorrow as a quick response. If we see a snapback, financials, I feel like they held up a little bit better today, relatively speaking, than some of the other sectors. I'm still liking some of the breakout candidates that are post earnings that I know had good reports, solid responses. So I'm still, interested. This is probably my favorite place from a bullish perspective, at least. Over in industrials, push down off of that resistance. This one's becoming pretty easy, I think, from a technical perspective, from a technical read perspective, at least. Right now, I think we just put this on that it has to break out before we get too crazy one way or the other. I'm just going to steal this line here because that's just not happening. We've got a lot of history, as you guys know, just at that $79 range, including very short term. We've bumped our head there a few times in that ballpark. Push down here again today. I think we're looking for the breakout here as the signal from a bullish perspective. On the other side of things, I think you can make a very strong case that we are in a little bit of a sideways action. We are slowly creeping up, but we are not really going anywhere and haven't for a little bit now. So I believe from a support level down in that $76 range is really the number to be keeping an eye on there if we're thinking about bearish signals. Kind of sitting right on those averages, was able to hold its 20 today, which on a day like today, it's a small victory, but it is a victory nonetheless. Of course, always fun to look at our old friends in Boeing on days like this. They are hanging out at a support level. I think I'm still shying away from Boeing. I hate things that have weird news, things that can come out of the blue, and certainly Boeing, in my opinion, still is there, and I expect that to pretty much be the case. But they're in a really interesting place, whether it's as a potential support bounce or a potential breakdown play. And certainly Boeing can impact their friends over in this industry. So certainly something to keep an eye out for. You had Johnson Controls here come out with earnings. I'll steal you. Yeah, you guys know I can't draw straight lines. It takes me a lot longer than it should. Nice little break on JCI. So there's some nice looking, there's still a lot of strength in the market. There were still like 30 S&P companies that hit new highs today versus 4 that hit new 52-week lows. So still we're seeing a lot more strength overall than we are weakness, but we're, for the first time in a little bit, we're starting to see some chinks in the armor a little bit, at least in the very short term. Over in tech, working back just like the NASDAQ, we kind of have this old resistance zone that kind of act as our first support catalyst beyond those moving averages. Semiconductors, I think we're just going to have to let this one settle down because they still look pretty nice, to me at least, as a whole, still on a pullback. Now, they looked a lot prettier from a pullback yesterday, at least going into tomorrow. But if we see a small inside candle tomorrow, followed by upward movement off of this 20 SMA, I'm still going to be really excited about a pullback in the semiconductors. Don't see a scenario where tomorrow is the day to do it with how much selling we saw here today, but the price makes a lot of sense. Need to see that shift in momentum. So I still believe it's an interesting place for pullbacks overall. But of course, we looked at AMD, really rough response to the earnings, pretty darn bearish before the market sold. Now, in all fairness, they didn't really drop any when the market started selling. They'd already called it good for the day, so they didn't pick up the pace on the bearish side for what that is worth. As you can kind of see here, they're kind of in the general ballpark, it looks like, at their longer term trend line. In that general ballpark. And so if we can, start to see some stabilization in the days to come, this is not my style of a trade, but I will respect trend lines just because I don't want to trade off of them as a general, well, not as a general rule, on deep retracements, I should say. This would be a sensible place if we start to see some signals from a pullback perspective. Hard to believe that's going to happen tomorrow based off of today's price action, and certainly they can impact the semiconductors. Of course, we had our old friends Apple. I don't know if they're technically, depends on where you look. Sometimes they're consumer goods, sometimes they're tech. But a gap up on the earnings, about 5 or so percent, held up pretty nicely. Nothing to see here, I don't think, from a trading perspective in the very short term, but a decent response to Apple's earnings here today. We've got Cisco coming up with earnings soon, so more than anything, it's just an interesting watch going forward. Just a couple of weeks until earnings. Quite a bit of movement down on there. We also have Qualcomm coming out on the earnings side here tonight, another big semiconductor over in tech. So in tech right now, I still like it. And I do believe from a pullback perspective, it's a place worth taking a closer look at. It feels like it's hard for that to be tomorrow with the way the individual companies are looking and the steep selling of today. I just don't see a ton of breakouts. Although I think you have to kind of like at least that Cintas Corporation. They're in support services. Some people have them in tech and some people have in industrials, as is so often the case on the classification system. Certainly an interesting an interesting character. I really like when things, build clean ceilings or floors after a nice gap on earnings. Certainly, I think something worth keeping an eye on. And they say industrials there, but I think they're technically in tech, but don't quote me on that. I may be off there. Over in Staples, it was kind of ugly before it got ugly today. These guys were kind of a trendsetter right out of the gates, gapping down on the open, drifting to the downside. Obviously, that's going to accelerate as the market starts selling off as a whole, but certainly showing some signs of weakness here today. We still have, we kind of came off of the lows, kind of hanging out at that old 59.40 ballpark range. So there's still not a real violation of trend at this point. We had a 50-day moving average, but I want to go take a look at some of these stocks to kind of see what they are looking like. Now, had Mondelez on earnings, not a great response to Mondelez. That's kind of a rounding top, kind of a scary looking chart from a bullish perspective, I think. And you're kind of seeing this in some other things as well. This is kind of pronounced where things have been going really great, and they might keep going really great, right? But we kind of went into a potential breakout. Then we started to make some lower highs, while still holding support. Now we've broken through support, broken through the 50-day moving average, that rounding top, a little bit of a cause for concern, at least short term. Of course, Pepsi kind of got ahead of the game there after breaking down here, breaking their support level, had a little bit of a retracement, showing some weakness. Walmart pulling back further than I think they should have. We had them in the report. They needed to see some upward movement, and they have not seen that yet. I think we can officially get rid of that because that's a whole new trade. Deeper pullback, the trend still intact. Doesn't have that same look that, say, the Mondelez does or maybe the Pepsi does, but a deeper pullback than we've seen on Walmart for a while. Quite a bit of selling over in Coca-Cola here today as well. Not really a change in trend necessarily, but certainly some selling, a little bit of a gap fill going on over in Procter & Gamble. So it's becoming a little bit more mixed. For the first time in a little while, hey there, Marie, great to see you. You look at something like Pepsi and you say, you can't buy that chart. Maybe you can say that, but I can't. I could. You could talk me into a bearish play on it potentially, but not into a bullish play, at least in the shorter term. You look at something like Walmart and you say, that's just too deep of a pullback, and again, I know that is more of a me thing. I think Pepsi's a little more universal with the trend placement. You look at something like Mondelez, and that's a slowing momentum type of a pattern for the first time in a while, seeing a little bit of weakness in some of these stocks. We, of course, a big downward movement on MO here coming off of earnings. These guys are so weird, but you have to like where they are from a breakdown perspective. Sometimes these tobacco stocks can just do weird things. I generally don't like them because the pattern will look great and then it won't move at all. And then all of a sudden there's some crazy day where it goes up or down a lot. But technically, that's just my personal opinion of it. Technically, that makes a lot of sense for a breakdown candidate going into tomorrow. Of course, on the other side of it, we had that really great response to Philip Morris on earnings, breaking through resistance, pulling back, holding the 9, but all of a sudden with today's price action, broke the bottom of that gap. You look at the staples, and I don't think there's reasons to be tremendously concerned, but I personally, for the first time in a little while, and it kind of started on that last pullback too, right? We kind of talked a little bit about, I didn't really trust that pullback all that much, in that, last week, just starting to see a little bit more turnover in some of those stocks in the very short term in the staples. So I still think our trends overall are still intact. The XLP ETF here, still above a rising 50. Heck, yesterday was knocking on the door. It was hitting highs, right? So let's not get too carried away. But when you look at some of those stocks, I think you have to say some of them make for interesting bearish candidates. And that's the first time I've said on really more than any one or two individual stocks on the staple sector in quite some time. Certainly not a great look over on Pepsi. And that Mondelez chart, that's kind of ugly to me, especially if we see some follow through. Over in utilities, a little more of a drift to the downside. Again, as long as that 59 holds, I continue to say that we're in some sort of neutrality within this trading range. If we see some nice signals at 59, especially next week, and once we've kind of worked through some of these utility earnings, I think at that point we can talk about being interested, pulling back into 59 or breaking 61. Either of those could be interesting price points for utilities going forward. On the other side of things, I think a break of that 59 can absolutely be called a bearish signal. And while know the future, there's really not a lot of support if that 59 zone does give out until 57. I mean, we'll have little things, little swing resistance, a swing low, pivot point, but no real major price action. As you can kind of see here, you guys mostly remember, we've got some stuff at 57 or around 57 on XLU. We've got a good history built here at 59. Below 59 and to 57, there's not a lot there. So if that gives out, I will expect a deeper pullback overall in the utilities as well. I don't necessarily believe that's going to happen. And until it does, I'm not going to think too much about what to do about it. I think prepping going forward, thinking about if we're interested in buying off of that support would make sense. If that breaks, though, I think you have to call that a bearish signal, at least short term. A lot of empty space on the utility ETF if 59 does give out. Over in the healthcare sector, much like everything else, kind of sold off here today, working into what's a pretty important support level, and we kind of bounced off of that old pivot point. That was a pretty major price action happened there, right? Both from a resistance perspective and a breakout perspective. This is a pretty important level on the ETF, at least has been as of late, around 90.60 or thereabouts, starting to show a little bit of weakness, whereas we could argue that this is the support zone, right? Traders were trying to move in the last week or so off of this higher level, and there was a little support there, but I think you could argue that this is also a place for that. If we give out from here, probably should expect to see a little bit of selling in the shorter term if that support zone does give out going forward. Of course, we looked at Pfizer yesterday, and they're worth taking another peek at here after the debacle of the last couple of days. Tried to hold their own here today, got caught up in the market. This is an interesting price. Still don't think there's any bullish signals on Pfizer at this point, but nice to see it kind of put up a fight. On the other hand, it also established a lower high and a lower low on the intraday. So if today's low does give out, that's kind of a signal that for me at least, I'd say, okay, this support zone broke, I think, with the price action. So if I'm looking at it from that bearish perspective, and maybe I have other candidates, but breaking out of today's low might be a little bit of a sell signal that maybe we're going to work into that 37 range to test that one out. And again, still an area that even before Fed Day here, I think I've thought we needed to be pretty careful with. I still continue to believe that going into the very near future, at least. A little bit of indecision, like I said, pretty much the last week or so, on a case-by-case basis. I'm not expecting the sector to drag me along or fight tremendously against me, whether I'm playing bullish or bearish in the here and now. And over in the discretionary, worked right back into our old breakout point. Again, a little bit of a cup and handle breakout point, a pretty important one, important level of support in my mind. Did see quite a bit of downward movement, kind of rallying up, closing right there. Of course, and again, much like yesterday, it starts with Amazon. Whoops, I put them in the wrong place. Well, I'll have to make a note they'll just live there forever now. It starts with Amazon, more selling, breaking the 50 yesterday, more follow through here today. Again, this wasn't just because the market sold off. This was happening before the market sold off. We're seeing weakness here right now over in Amazon, seeing Home Depot getting pushed down off of that resistance level. Nothing too terrible to see at this point in time, but not a great look. More pulling back on McDonald's. Maybe there's something here. This might be one of those few deep pullbacks I could be interested in, but it's not tomorrow on, deeper than it's been, deeper than it's been, right? You can see this kind of a trend. We're seeing so many stocks going below their 20s that have been above them for extended periods of time. And while it's not necessarily a bearish signal, it definitely is a little more of a, be careful signal. You have Starbucks over here. If we could see a doji tomorrow on Starbucks, I think we'll be happy. At least I will be. Still kind of in the pullback, but that was such a good report. Certainly believe that Starbucks belongs on a bullish watch list. And if we get a tradable pullback, I will certainly be interested over there. And of course, you have lows here, a couple weeks until earnings, getting pushed back down after kind of violating their trend, showing a little bit of indecision. So this area showing a little bit of weakness. On the other side of it, some of the characters that are usually dragging it down are helping it out. You've got Nordstrom's here, big jump up here today, closing above the 50-day moving average. I think an even more interesting chart is Urban Outfitters, which I've had on a bearish breakdown list for a while now. All of a sudden, I have to wonder, is this a reversal? Now I got 20 days till earnings, so I have some time to decide, I guess. But this is looking, an awful lot like, at least potentially, a little bit of a double bottom type of a pattern, closing above the 50, still have some resistance that we have to contend with before we get confirmation of that, but seeing a little bit of upward movement in some of our retail, and these, these characters are typically the ugliest charts, at least as of late, to me, in the discretionary area. So maybe a changing of the guard, or maybe that's just the day or the time that was. But I think that's an interesting potential reversal candidate. And I almost feel guilty to say it, but that's starting to look like maybe a W. Directly on the ETF, keep an eye on this breakout point. Oh, that's not where I want to be. I hit the wrong button there. There we go. Keep an eye on how we respond to this breakout point. We breached it on the intraday, but the close is what's important to me, at least. If we can see some upward movement, maybe there's something here. But again, much like the broad market, all of a sudden, we've seen a little turnover. And I think we have to, broadly speaking, when we look at Amazon, when we look at this ETF, you have to call it what it is. We put in some lower highs, at least as of right now. We've made some lower lows. Whoops, well, there we go. We've made some lower lows. Why, how, doesn't matter, right? It happened, and that's what's the most important thing. Gonna have to be a little more cautious with this sector going forward. There are some interesting pullback candidates, I believe, things like McDonald's and Starbucks. I certainly have them on my radar from a pullback perspective, but I don't feel that we can make a good case that tomorrow is the day that we have to be jumping in to the discretionary sector. And over in real estate, a little more upward movement, putting us closer and closer. I think we can officially do this now personally. We've seen a little bit of a symmetrical triangle start to develop here. Still some earnings yet to come. Nice upward movement. We've seen some downward movement. Would love to see us trade within this range for just a little bit longer and then break it one way or the other. So as long as we're in this little triangle here, I'm going to continue to have a overall neutral view on the real estate sector, maybe a little tiny bit skewed to the bullish side because of the overall strength of the trend. But new signals wise, I think we need to come out of this triangle before we get too carried away. And lastly, over on the communication services, again, just like the market doing what it does. Of course, we want to see the big names. How did they respond here? Facebook, not tremendous volatility on the Fed announcement, but more downward movement after failing that breakout point, continuing creep to the downside. Have a 50-day moving average not too far away that might be an interesting price for some of the bulls out there. But a little bit of downward movement I would expect going into the very near future. A little more of a pullback here, giving up that support off the opening of the gap here on Google. But relatively speaking, I think when you factor in the overall selling pressure that we saw in the market, overall, I think you have to be pretty happy with where it is. Of course, we had EA come out with earnings, big gap to the upside. Certainly an interesting one. I think it was Verizon that has earnings tomorrow morning, so that will be a fun one to keep an eye out for. So yeah, they're tomorrow morning. Disney coming out here next week. So not a whole lot has changed. I do believe as we're looking at the ETF, there is an interesting signal that could develop. We are going to need the market to be moving to the upside, though. The break of the all-time high on the ETF, and knowing this ETF, that means Facebook and Google are playing ball, right? Or at least not tanking because of how important they are to this particular ETF. A break beyond that is an interesting signal. A pullback, I think you could make a case. I tend to shy away, as many of you know, from this ETF simply because it is so heavily weighted to Google and Facebook, and they have just such a, you're basically trading them and their friends. It's kind of how I look at it. But a break of that all-time high would certainly be a really interesting signal. On the support side of things, we've got a swing low. We saw upward movement, create a higher high off of that. We've got a ways to go before we're breaking support over on XLC to get any real bearish signals. So it's going to be interesting going into tomorrow. I think the best way to look at things is be open to good quality bull plays, good quality bear plays. Don't run off chasing. If the market has a snapback or goes crazy to the downside tomorrow, don't feel like you have to be jumping into it. There will be other times. So I'm going to be taking a cautious approach. I lean to the side that this is just the market throwing a fit because usually that's just the safe bet, right? That's just a good historic bet. Doesn't mean anything going into tomorrow necessarily, but if we do see some slowing down on the selling, I'll be overall looking at it as a pullback opportunity. But there are certainly some interesting bears out there too. Over on the VIX, of course, we saw a nice spike on the VIX, right? To nobody's surprise, you see the market sell off like it hasn't really sold off for a while. I think this was the roughest day since May. So it's been a while since we've had any real selling in the market. So definitely a spike up on the VIX there. Maybe we can find some interesting credit plays as well. Of course, we see the market. We'll take a peek at them, Larry, before we get out of here. No problem. We see the market sell off dramatically post Fed announcement. It's almost a certainty that the dollar is going to have ran on that, right? And today, whether that statement is true or not, that is certainly true here today. Breaking out along with the market selling off on the Fed announcement. Nice clean breakout, top to bottom candle. I don't know that this is something that you can run off and do something with, at least from a swing perspective. But if this is where we close, if this is our close on Friday, there's still a couple of days, right? We'll see where this one takes us. We've broke this resistance before, and it looked certain that it was going to close above that resistance on the weekly chart, and it never did, right? It wouldn't be the first time that happened. But if it is, that is a very, very bullish signal. We need to get through this week, but that is a big break. I expect if we can break, we're going to have more upward movement on the dollar. I want to see some follow through. At this point in time, though, it's not only, it was, killing it before this, right? A little bit of a catalyst, at least short term, a lot of positive momentum. I wouldn't be betting against the dollar right now. I don't know that there's a great new swing trade there, but I certainly wouldn't want to be betting against it. On the other side of things, of course, when we see the dollar pop on Fed announcement, we see the gold drop here on Fed announcement. Not a lot to see here on gold. Still kind of in this, creating higher lows along the way. Still got some consistent tops. Need to probably see a little more upward movement to call it a breakout. Still think you have to be looking at gold from a bullish perspective. Just more cash flow right now than directional outside of the intraday. Silver, quite a bit of movement here today as well off of that Fed announcement. We're in a little bit of a range. This one's an easy call in my opinion. Silver, gold can be a little tricky, technically right now, I think, but silver, ton of movement, nice consolidation. Look at this on a weekly chart, and I think that will really kind of ring true. Big breakout. Consolidation. We've got a 3-week high forming now on the tops here. A break above that, not a lot of resistance really until some people might call it 17, but some people might call it 1740. There's room, whatever we do decide we want to call it. Very interesting breakout candidate. Probably how we have to look at this one, in my opinion, at least going into the rest of the week. It's probably breakout city or nothing for me, at least on silver. A little bit of a bounce back day here on natural gas. Pretty solid day too. We'll just wait. We'll let this guy retrace, see what we can have develop. If we can get another selling opportunity, I'm certainly open to anything bearish on natural gas right now. Anything on the bullish side of things, you guys know the drill. Got to take out 250, got to take out that old breakdown point, got to take out that recent swing high. Anything between there, I'll be looking at it from a selling perspective. Shouldn't be tomorrow, based off of where things are. Keep an eye on on this in the days to come, and certainly if you're interested in kind of getting some practice, or at least with trading natural gas, maybe we'll get an opportunity. Nice little break above that 200 hourly, which can make for some interesting things. The 200 hourly can be an interesting moving average on natural gas, in my opinion. So a break above that, as long as we're above that, should see a little, see some positivity, but I expect to run into some trouble in the days ahead. Some sort of slowing momentum, some sort of turnaround candle, and some bearish retracement opportunities, potentially at least there. Just probably going to need at least a couple more days. And over in crude, a little more upward movement off of that break yesterday. Like I said, I get it. Right now, this is bullish. If we just zoom like this, say what's going on, we've created higher highs and higher lows. We're now above the moving averages. If we maybe scrunch into, say, a 4-hour chart here, it's nice little potential double bottom type of a breakout that we're seeing here. So I think right now the bulls have this one, not a lot of resistance until 61. There's a lot of things that could turn into resistance, but right now, I don't think there's any reason to think that there's anything that has to turn into resistance until we get to 61. You might want to call it 60. We did have that little pivot here at $60 back in May, but there's still a little bit of room to run. I still think the true signal is going to be breaking out of this longer term range, around that 54.50, 55 range, and that $61 range over on crude. But bulls definitely in control here, following through on that break. So nice to see. I know there are a few people that were on the bullish side of things. So taking a quick peek at Intel here today, another one in the semiconductor space. I think this is going to kind of follow along, Larry, with SMH or many of the other ones. AMAT, another nice pullback. I think you have to like what we're seeing here on Intel from a placement perspective. Certainly has recaptured its mojo and its trend, holding that 20-day moving average here today, still holding its shorter term trend, showing some nice upward movement. A couple ways that we can look at this. One, I think we could very easily look at this as a pullback opportunity. I think again, I can only speak for how I like to do things. There's really no scenario where I would buy Intel tomorrow, for better or worse. But if we're having this conversation, we're seeing a small inside candle, a doji, a hammer tomorrow. There is a scenario where I would potentially be doing it on Friday. And so the price is interesting. Just again, we have to kind of get that reversal on the intraday, on the trend. Right now, it is not there, at least in my opinion. So it's at least one day away. So I think we could look at that, but that's just my style of pullback trading. Where the price is right, I guess, if that makes sense, Larry. Like where we are in the price, just think we need to have some sort of development to get some actual signals now that other people want to come in off of that price. I think that's a very fair way to look at it. I think another easy way to look at it is, as you can kind of see here, after that big gap down, that's exactly what acted as our resistance catalyst here on this recent pullback. This started well before here today. So a break beyond that, certainly a very interesting bullish signal as well. So I think, depending on how much, or how aggressive I am, whether generally speaking or specifically on Intel here, I think you could make a case if we see the signals for the pullback. I do think if any pullback, we have to respect that $53 level of resistance. I think we have to, based off of the history and the gap there. Or if you're more conservative, I think you could make an interesting case on the breakout side of things above around 53, it looks like here. If our trend gives out here, this trend line, this 20 does give out, probably just going to have to let something new develop before we can have too much of an opinion. It's in a really interesting spot. And as it is right now, it seems like if we get the right candlestick, could be an interesting opportunity. Even, maybe you don't agree, but I would want to have first target set at 53. I'd want to have, that's kind of where my head would be. But with where we are right now, there probably is realistic risk to reward in there. And now if we see a giant green candle tomorrow, probably goes into the breakout list. If we break trend tomorrow, probably goes into, I'll look at something else list, but could be an interesting candidate. Thank you for bringing that one up, Larry. I've kind of taken them off of my list since the kind of flippity around here. You guys know me. I'm more of a front runner, if you will. I'm always looking for who's doing well already. I much prefer an AMAT technically to an Intel, things that don't have resistance or less levels of resistance. So, but certainly I think Intel has done enough to justify getting put back into a bullish watch list. And certainly there are going to be options in the semiconductors, whether it's Intel, AMAT, Micron, heck, even AMD at that longer term trend line. I don't think that it looks like it's likely to be tomorrow, or we have strong reasons to believe that it should be tomorrow. It could be tomorrow, right? We all know that. It looks like it does need a little bit of development, but there's still very interesting pullback candidates in a variety of the semiconductors at this point in time. And there's probably one for all of us if we're interested in it. So so you had the stock at 46. So yeah, I mean, I like the trend on Intel quite a bit on that reversal. Like I said, Larry, you know me, I generally prefer the less levels of resistance, the better, as far as I'm concerned. I'm much more the type of trader in this trend than this trend. That's just my personal style. But yeah, I think your trend is still intact here, at least as of right now. We're kind of at that trend line, but there are plenty of catalysts that can hold it up even beyond that. But ideally, from a bullish perspective, whether it's we are in it, obviously in that case. But even if we're looking to get into it, ideally this, roughly speaking, and it's kind of a crude trend line. You know me, Larry, I can't draw a straight line, but it kind of gives us a ballpark area of where it is. I do think we want to see that general trend line hold for us, that general area hold for us from a bullish perspective, whether we're in it or we're out it. If that trend breaks, that would be a show of weakness, right? Tradable enough? Well, that would be up to the individual. Could that be a place where I sell? Sure. Could it be a place where I sell a covered call to get some cash flow, maybe anticipating a little more selling? Sure. Could be a place, if it's a long-term play, where I'm open to the idea of buying a put option as some protection. Absolutely. But as long as that trend is intact, I don't really feel like I have to make those type of decisions personally, whether it's Intel or whoever else it might be. And you're very welcome, my friend. All right, ladies and gentlemen, I don't know how it happens. You know, I want to get you guys in and out of here in a half an hour, but it's so impossible to do it. I had like 3 days in a row where I was like 35 minutes. I was thinking, yeah, we're doing it. And then, of course, earnings season is part of it, and Fed day. But I don't mind talking stock. I just like to get you guys out of here so you can go do something else with your day. I know y'all have better things to do than hang out with me, but I certainly appreciate each and every one of you hanging out, talking stock with me. Certainly an interesting day in the market. I think we let the dust settle a little bit before planting strong flags that, yeah, this is bearish, this is the top. You know, there's not a lot of signals that say, at least technically, that this is the top, but there are a few more signs of weakness. Some, you know, shorter term support levels being broke, some stocks kind of turning over, breaking below some of those shorter term moving averages for the first time. So we are seeing a little bit of turnover, and maybe it's just because that's just how it is. We're in earnings season. Earnings season's weird, you know, and so even without the Fed announcement, earnings season's weird, right? So I don't think we want to get too carried away. I want to respect our charts and go from there. So thank you guys as always. It is certainly my pleasure, and I do appreciate everybody's time. Always a lot of fun going through this process with you. We'll do it again here, same time and place here tomorrow. Over on Tackle Trading tonight, we do have the bear market survival guide. Hey, maybe it is maybe it's supposed to be that way. I don't know. So for all of our team members of that bear market survival guide, have a great time over there. Of course, if you're not a member of Tackle Trading, you know the drill. You're always welcome to head on over to tackletrading.com, send us an email, team@tackletrading.com, tell them I sent you. We'll get you hooked up with the free trial. We've got the stock of the week over on Instagram, Old Domino's Pizza. Man, that was an ugly one. That was an ugly, and I say that in a loving way, Domino's Pizza, from a bearish perspective, still struggling. So that's over on the Instagram. Of course, we always encourage you to join us over on our social medias. Me, I'm the Twitter dude. You guys know that. Over at Tackle Trading on Twitter, or of course me at FrankMartin23 on Twitter as well. And you're very welcome, Micah. Marie, great to see you. Thank you for joining us. Always a pleasure to have the Theta Queen herself joining us. Hope you are doing well, and I know you're doing well with Theta. So great to have you with us. As always, guys, thank you so much for your time. Get out of here. Go enjoy the rest of your Wednesday. Check the open, check the futures. Still lots of earnings, so a lot of things, a lot of ways this thing can go. We're working through earnings season. We can now see the end, which is always a fun thing. But certainly some interesting characters to be following, both bullish and bearish. Maybe some setups need to happen on a lot of them before a new trade. But that's one thing that earnings does present, is 3 weeks from now, some interesting things. Today is like, I can't find anything new to save my soul. So, all right, guys, thanks as always. Get out of here. Have a fantastic afternoon. Enjoy the bear market survival guide if you're a team member over there. And I will see you same time and place tomorrow afternoon. Thanks, everybody. Have a great